All right, in this lesson, we're going to be talking about the voucher system. The voucher system is a system in place that aids in the cash payment activities. So the voucher system is actually a system of tasks that have a whole bunch of internal controls that helps to ensure that payments that are made are accurate, appropriate, and they go to the right person rather than just payments just being made. So this is a great internal control system. Overall, we call it the voucher system because it's going to be based on different vouchers, which have to be completed and in hand in order for a check to be issued at the end of the day. So let's talk about the cash payment activities. Now, what's the goal of the internal controls for cash payment? Well, obviously at the end of the day, the goal for internal controls for cash related to cash payments is that all cash that is paid is for goods or services that the company has actually received, right? We don't want to make payments if we haven't received anything, whether that's service or good. So we will only want to pay for things we've actually received or actually received in goods or actually received in services. One way we can ensure that payment is made correctly is using a system called the voucher system, and that's what we're going to show you in this lesson. Now, the voucher system is actually an approval system that is based on a series of documents or processes that is used to provide evidence of the payment requisition, which leads to the payment of cash. So the payment requisition is a request for cash to be dispersed. Well, we have all of these documentations and paperwork and processes that must be put in place in order for the cash requisition to be approved and the payment to be made. So that's what we're trying to do here. Now, what is the voucher system? Well, the voucher system is actually a set of kind of documents that must be in place. So you must have all of these documents in place in order for a cash check or a check to be cut, signed, and sent to the vendor. So these represent those documents. The first one here is a purchase requisition. So a purchase requisition will give us a requisition, a request to purchase X, Y, and Z product or purchase a service. So whoever's requesting it needs to produce a purchase requisition. That purchase requisition will then go to the purchasing department as well as the manager in charge to sign off on the okay to go ahead and purchase whatever that good or services are. Once we've done that, we will then create from there a purchase order. So a purchase requisition is a request to purchase something. A PO is kind of the approval to go ahead and submit the purchase. The purchase order is kind of like a sales document that you would give to a retailer. That retailer will then fulfill the order based on the sales document. So that's what a PO is. Then we would receive a receiving report. So what happens is the goods would come back, the goods would be sent to our company, and then the receiving department will prepare a receiving report. It literally is just a report of what they received in the warehouse. So the receiving department opens up all the boxes, looks at all the invoices, counts all the items, and then on a report says we received $5,000 of X, Y, and Z product. They do have a little bit of the detail about the PO, but they don't know how much the items are worth. So they're given very little information on what they're going to receive so that we get an independent verification that the items they did receive are what actually was ordered at the end of the day. So a receiving report is prepared by the warehouse that receives goods throughout for the company. Now, if it's a service, there won't be a receiving report. So services don't have a receiving report. You just got to know that the services were performed. Then the supplier will send an invoice. So typically what happens is if you order something from a company, the company is going to ship you goods with a bill of lading. The bill of lading will say exactly what's on that shipment. But they will also send in the mail an invoice. So two separate things. We've got the invoice and then we have the bill of lading that also has all of the goods that are being delivered. The sales invoice comes usually under a separate cover. So we'll have the supplier's invoice under a separate cover that we're going to attach to this whole voucher package. And then we have the company check or the EFT if we're going to send them an electronic payment. This is the voucher system. So if I'm writing the checks, I won't write a check until I see all of these documents. I need to see a purchase requisition, a PO, a receiving report if it's goods, not services, and then the supplier's invoice. Once I have that voucher package, we call it a package because there's multiple documents. Once we have those voucher package, then I can sign off on the check. Then I can actually approve the check. Then I can actually write the check. So this is an internal controls, because without, let's say, the purchase order, we don't know if we actually purchased it or got approval for it. If we don't have a purchase requisition, we don't know if someone actually requested the goods. If we don't have an invoice, we don't know if we actually are paying the right amount. And if we don't have a receiving report, we don't know if we actually received the goods. So we need all of them to tell us that all the steps were followed, and if all the steps are followed, then we can issue a check. Now, what about this? What about the internal control focuses that we talked about? Well, here's how that all works here. So the purchase requisition establishes responsibility, who's responsible for the items that we purchased. The purchase order restricts access to what vendors we can use. The receiving report is a documents our procedures. It also segregates the duties necessary. The supplier invoice independently verifies that we're paying was actually what we received. And then we also document those procedures. And then the company check does all three of those. Document procedures because we have the check. We independently verify because the person who's writing the check independently verify that the voucher package is intact. And then we segregate the duties. So we set the segregation of duties. Someone else who is not part of the voucher system package creation is the one that's actually approving it. So we're actually segregating those duties. Now, the voucher system provides a robust way to ensure payments are made for services and products that the company actually receives. So that's the key here, is that the voucher system really does provide us everything that we need to ensure that any payments that the company makes are appropriate and therefore the right amount, and that we got all the goods that we were expected to get based on our purchase requisition and then the sales invoice. So that is a look at the voucher system, an internal control activity piece that helps us control the amount of cash that we pay out. So hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, it is Patrick. Don't forget to press the like button and share this video with someone who could get a lot of use from watching this lesson, like maybe a classmate or maybe a friend or maybe just a parent, just because you wanted to share this video because you're very excited about what you saw. Share it with someone. And if you want to help us grow and help us make sure that we put the very best in accounting topics out on YouTube, make sure you press the subscribe button and turn on that notification bell. That way you're alerted every time we post videos to this channel. Now, I do this with every one of my classes at the end of class. What did you learn from this lesson? Put that in the comment section below and I'll respond to you on what you got out of this video. So hope you enjoyed this video, and we will see you in the next lesson.